Welcome to the Real Estate Investor Secret Series. This video is about buying a short sale. This is part 1. This complete video series reveals the secrets that real estate investors have been hiding from average Americans for decades. These secrets have the potential to save you thousands, if not tens of thousands of dollars the next time you buy or sell your own personal residence. Before you buy or sell another home, you owe it to yourself to discover what real estate investors have spent tens of thousands of dollars to learn. This complete video series reveals the following: how to buy a home using the short sale method, which is what this video is about. The second one is about how to buy a home without qualifying for a new loan in your name. Basically, how to have a home given to you. This one secret is real estate investors' best kept secret. The third one is how to build long-term wealth holding rental properties. The fourth one is how to protect your assets, meaning how to protect these homes in asset protection trusts. And the fifth one is to discover 4+ methods real estate investors use to sell their homes quickly without using a realtor. And one method shows you how to sell your home in 9 days. Now, in this short sale video, we will cover the following: how the bank analyzes a short sale. We're going to get you thinking more like a real estate investor, which means we're going to get you thinking about how to buy right or don't buy at all. And we're going to tell you why you want to be disapproved for your short sale offer. Now, a short sale is basically a sale where the lender allows the house to be sold for less than what is currently owed on the property. There are many reasons why a lender will do this. Some of them might be because the owner is upside down on the property, obviously the bad real estate market conditions, the property's physical condition, the borrower's financial situation, etc. In fact, there are many reasons why a home goes into foreclosure. But in this real estate market, the biggest reason seems to be because the majority of the properties that were purchased or refinanced over the past decade were done so at overinflated prices. And when you figure in the fact that approximately 17 million Americans have lost their jobs, that equates to a multitude of motivated sellers, which explains why there are so many foreclosures or short sale opportunities available today. In fact, the latest figures show back in June that 11 million homes, or 23% nationwide, homeowners are underwater, meaning they owe more on the property than what it's worth. In Las Vegas, it's approximately 80%. And these numbers should rise in 2011. The time is running out for many Americans. Now, there are many factors that the bank takes into account before a short sale will be approved. Now, let me give you some of the details. A homeowner must prove a hardship. Could be because of illness, could be because of unemployment, maybe a death of a loved one, a divorce. There's many reasons why a homeowner would have a hardship. And for a lender to approve a short sale, the lender has to address these factors. 1, how many non-performing notes does the bank have in their portfolio? It is for this reason why banks are now turning to short sales, because they simply don't want to take another house back. In fact, 3 of the major banks have been told not to take any houses back, and they haven't been. I know people who haven't made a house payment in 24 months. Now, number 2 is, what is the financial condition of the mortgage holder? The third one is, what is the financial condition of the private investor who owns the loan? And what are the loss mitigation policies of the private investor? What is the loss mitigation authority of the financial institution servicing the loan? And what is the loss mitigation policies and procedures of the government agency insuring the loan? Now, when deciding yes or no on the approval of a short sale, mortgage companies consider the following: the borrower's overall financial situation, the property's where is as is value, the property's after repaired value, the expense to rehab the house enough just to resell it, the loan company's expense of securing, maintaining, controlling, and marketing and advertising the home up until the day that the sale closes. Now, once the bank has determined all of these issues, only then will they determine to short sale the home or to foreclose and sell it at auction. Should the bank foreclose, they will either sell at auction or they will list the home with a realtor as an REO property. In this crazy real estate market, and with the current economic conditions the way that they are right now, you want to buy your next home well below current market value. This built-in equity will help protect against further possible declines in the real estate market. If you plan to stay in the home for many years to come, raise your family, and build a lifetime of memories, then this may be a great time to buy, but only if you buy right. The best reason to buy right now is to take advantage of the low mortgage interest rate, because I believe if the economy and the housing market continues to get worse, you will see interest rates go up. And right now, they are as low as they have been in about 50 years. So take advantage of it now, because believe me, they will go up. So make your best possible deal on a short sale. Buy at least 15 to 20% below current market value, if not more, to absorb declining values. And get yourself a good deal in a nice, safe neighborhood with low monthly payments. Now, we want you to think like a real estate investor. Look at a short sale as a big game. Investors know that sometimes you can make a great deal and sometimes you can't. And no longer buy with your emotions. Buying a home may be the biggest business decision many Americans will ever make. Learn how to buy your next home like the real estate investors do it. And that means making a profit going into the deal. There are certain steps to consider for giving yourself the best chance for success. First, you must recognize the difference between a good short sale candidate and a poor short sale candidate, meaning you need to find a very motivated seller behind on their house payments. Second, if the bank turns down your offer, and you better hope they do, because if they accept your first offer, in my opinion, you're paying way too much, then you need to find out why they said no. Most common reason is that the BPO on the home was too high or your offer was too low. Now third, please keep in mind that the banker may be in an office 2,300 miles away from where you live and have no clue what is really happening in your city. You may have to re-educate the banker. You may have to uncover the bank's concerns and motives, and then you will have to give them the answers they need while hopefully not having to increase your offer. Now, in dealing with the banker, never take no for an answer. Figure out the roadblocks, be proactive, not reactive, and remember, keep the mindset of a real estate investor. Go after the great deal or don't buy it. If you can't make the great deal, just shrug your shoulders, because there are many more short sale opportunities out there to choose from. So don't worry, the next home just may be even better. Now, in part 2 of this video series, we will discuss the following: the inner workings of a short sale. We're going to talk about why you may need a realtor. We're also going to talk about the importance of the BPO, and we're going to talk about the counteroffer. In part 3 of this video series, we will discuss the second and third mortgage gold mine. We will also discuss a short sale strategy that most real estate investors don't even know about. And we're going to talk about pending legislation in front of Congress that will impose a deadline on the banks to return an answer on a short sale within 45 days. And if you know anything about short sales, this is good news. MembershipAmerica.com. Come check us out.